Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. It is April. We're actually wrapping up the month of April here with this episode of Connect. We've been focusing all month on some of the best and brightest innovators and disruptors in the mortgage industry. And we've got another great episode today. And so I hope you're ready to sit back and enjoy a great conversation with one of the industry's top minds. Before we get started, though, I want to thank our sponsors over at Accelerate. So if you're looking to close out more loans in 2021, make sure and experience Accelerate's award-winning customer engagement platform that features lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing, which includes text, social media, email, direct mail, phone, ringless voicemail, retargeting, and much, much more. And as I always say, if you're not following Josh Friend on LinkedIn, you're missing out. He's got a lot of great stuff there. He's on a lot of great webinars and podcasts in the industry right now, and he's always putting out great content there over there on LinkedIn. He's actually going to be speaking at our Mortgage Innovators Conference, which is coming up here in just a week or so on May 4th and 5th. And if you want a more personal demo, make sure and go to accelerate.com and you can do that there. All right, well, let's jump into the conversation. I'm excited to welcome in Brian Zitin, co-founder and CEO of Reggora and good friend of the association here. Brian's also speaking at the Innovators Conference here in about a week or so. So, Brian, welcome.
Yeah, thanks for having me, Dustin. Super excited to chat and yeah, excited for the conference as well.
Absolutely. Well, and just a quick note here, if you haven't registered yet for the conference, make sure to head over to mortgageinnovators.com. If you actually use promo code Brian, you can get 50% off your registration fees. So make sure and take advantage of that now. Yeah.
I got a promo code.
Of course you got a promo code. Absolutely. Absolutely. Brian's got his own tech talk at the conference. So make sure and tune in for that. That'll be really fascinating to hear. So Brian, let's start the conversation here. Let's start right at the beginning here. Tell us a little bit about yourself, your background, and how you wound up starting or co-founding, I should say, Reggora.
Yeah, sure. I always make the joke, like many a young folk, dreamed of getting into the mortgage and appraisal industry as a young boy.
It's a dream of every.
Yeah, I stumbled into it through kind of real estate. So I do not have much of a background beyond what I've done here at Reggora. I co-founded the company with my college roommate at Boston University. So went to school at BU, been in Boston. My co-founder is like the technical guy. So he grew up in Millenore, Massachusetts. Has been in coding since he's 10 years old. We were just best friends. And I had interned at JLL, big commercial real estate brokerage, over the summer as like an intern, and basically saw just really inefficient practices just as being a real estate broker, essentially knocking on doors, cold calling, a really tough business to be in. So when we went into our senior year, we started our own real estate brokerage and essentially used an algorithm to get the contact information of every single property owner in Massachusetts. So instead of knocking on doors and cold calling, we could just send out thousands of emails programmatically. Hey, you want to sell your property? Hey, you want to sell your property? And believe it or not, we sold about $5 million worth of properties throughout our senior years doing that. Just finding the lucky instance of this person moving, this person's parent just died, they were selling, and pretending like we were more sophisticated than we were, sort of thing at the beginning. So as we were doing that,
you were doing this from your dorm room, right?
Maybe they could tell by my I did not have any facial hair at the time, looked like a pipsqueak 22-year-old sort of thing. So maybe the suits or whatever was helping, but yeah, somehow managed to do that, but not super scalable, right? Eventually you end out of people to just blast emails to. We didn't really want to start the brokerage. Like I said, it's a real tough business. As we were giving property tours though, in walks an appraiser with their clipboard, really old school kind of manual process in terms of how they were doing it. So that got us interested in like appraisal in general. And so I started literally driving out to middle of nowhere, Massachusetts, shadowing appraisers in their homes, watching them do their workflows, and eventually just talked to enough people where we got an idea of what we wanted to do, and took the money that we made doing brokerage, started building out tools in appraisal. People liked it, and zoom forward to now, we actually passed the 100 employee mark this week. We've raised about $45 million in venture capital, and hopefully on our way to appraisal world domination.
Wow! Congratulations, 100 employees. That's a big mark right there. Not too many companies can say they made it to that point. So congratulations on that.
Yeah, appreciate it.
So tell us though, for maybe some of those out there in the audience that are not too familiar with you guys. I know if you're in the tech side of the industry, you certainly are aware of what you guys do. But for those who aren't, tell us what's the innovative or disruptive factor and sort of the story or maybe the problem that you guys are solving over at Reggora.
Yeah, maybe I'll just start the super high level first, just touch for a second. So, I mean, appraisals are generally considered the long pole in the tent of mortgage in terms of really slow, tedious manual. It's the one part of the mortgage process where you have to send a physical human somewhere in the real world. It's not just all software, right? So there's a lot of workflows that go into that and managing all of that. And so we basically, what I would say are probably like the first real, like true venture capital backed fintech to enter the space. Traditionally, appraisal in a mortgage already not super sexy, and so appraisal the least sexy category in mortgage most likely. So there traditionally hasn't been a ton of tech talent, right? And not many 20-something-year-olds like working on the problem of appraisal. And so what we started, with Reggora, I think is probably the first real modern technology solution with open APIs, clean user experience, integrated workflows, lots of configuration, just generally delivering a more cohesive user experience for the appraisal flow from A to Z. So that's what we deliver: appraisal management software that plugs into, the lender and the core systems there, and basically helps them streamline the process for the whole way, hopefully making appraisal less of a headache.
Yeah, it's fascinating. I mean, you guys are, I'm a big baseball fan, and I love the story of Billy Beane here, locally in Oakland, and the A's, and his Moneyball approach, and just finding inefficiencies where people had overlooked it. And you guys absolutely, I mean, to your point, it's maybe not the most exciting and sexy part of the industry, but you found a great spot there where there's a huge inefficiency in the market to a problem to solve.
Yeah, no, for sure. And there are a lot of cool things happening in terms of appraisal modernization and all that. So we honestly just got very lucky with timing and that we can actually start having an effect, and things are changing. So it's actually an exciting time to be in the appraisal industry.
Yeah. All right. Well, let's move on. So what have you found to be helpful in building the company? I mean, you just mentioned that you guys are at 100 employees, so you guys are certainly making big strides there. And what have you found to be helpful in building that company and also breaking through in an industry and a sector of the industry that's very traditional? And as you pointed out, there's it was certainly due for an overhaul on the tech and customer experience side.
Yeah, I think that initially, and similarly, a lot of our early investors had this kind of misconception of, oh, you're going into this kind of older, stodgy industry. It's going to be really hard to break in. Surprisingly, first of all, appraisers love to talk and complain about their problems, but also, lenders are generally, I think, and that's why I'm saying we got lucky with timing. Fintech and technology in general have become a must-have, and so people are pretty open to just talking about their problems. And so, once we started listening to people's problems, just say, hey, tell us what you want and we'll build it. And then we kind of took that approach. People were generally open to it, as long as we could deliver a better experience. So it definitely was difficult in the beginning, building up the initial credibility. But once you get the first couple banks, then you can use them as references, and it kind of, slowly builds from there. Now we obviously work with like national lenders, but you kind of have to start small and build up. To help do that kind of on the company side, to answer your question, like operationally, we just had to surround ourselves with people who have been there, done that before in terms of more experienced executives. So, all my executive team is better than me in their respective areas with, years and years of experience. We're actually, depending on what day this podcast comes out, we're making a big announcement about someone who just joined our board, really huge industry veteran. And so, just bringing in people who can deliver that experience to us while we come at it with more of like the tech innovation approach, I think is the perfect balance for us.
Yeah, that makes sense. I think that any group or company that is based solely on one person trying to do everything themselves, you're never going to survive that way. And I think you guys are smart by finding people who have their core capabilities and letting them do that, and then everyone else kind of focus on their own passions and their own sides of the business that they're best at. So,
exactly.
So to that point, I mean, what do you think are maybe some of the key characteristics of a great disruptive or innovative leader themselves on an individual basis?
I mean, a lot goes into it. I think number one is kind of being humble, and that, recognizing that you don't know everything and you do need to lean on other people and take their feedback. And, it's kind of an interesting balance of getting the feedback and listening to the market, your employees, whoever your partners, but then also making like a gut call in terms of like, well, they're saying this, but really they want that, and kind of, there's the balance between people who are just, taking questions and answering them in terms of, oh, can you build this? Yes, we'll go and build that. It's like, well, what are you actually trying to solve? And so I think being able to kind of decompose problems in that regard, whether it's from a product standpoint, whether it's internally, where is the process breaking down, and be open to the feedback, but then kind of being able to make your own kind of creative decision making is really what leads to the disruption. Because especially in an industry like this one, it's really hard to just jump the line. There's lots of regulations, there's a lot of existing workflows you need to accommodate. So it's really, you have to, while I didn't have a background, I now have a PhD in appraisals. And like, you need to exist, you need to understand the existing infrastructure, be open to learning that, and slowly drag people, to the future, in a lot of respects. So I don't necessarily think, you have some people who are like the Steve Jobs, where you just jump from the iPhone. But in an industry like ours, highly regulated, lots of big things going on, I think that's kind of the better approach to disruption.
Yeah, no, I love that. I love that phrase there, decomposing the problem. I think that makes a lot of sense. I think you're right. There is, there is a lot to say about just listening to someone, kind of, hearing what your problem is, but, maybe you don't really quite understand, what the solution is. The solution that you're looking for is maybe not the global solution that'll solve the big problem, and not just your individual, problem you're working on today. I think there's a lot of wisdom there. So what's on the horizon now for Reggora, and maybe the future of the appraisal side of the business in general?
Well, that's what I was saying. It's super exciting because, there's been this big, so we've built this better software, right? But like I said, you have to send physical humans places, and there's been this challenge in the appraisal industry of the number of appraisers. It's continued to decline kind of year over year. And recently, the FHFA put out an RFI to the public around appraisal modernization efforts. And so what we're seeing, if, depending on what their response is, potential future where the appraiser isn't the only person doing inspections potentially, a third party, whether it's a real estate agent or someone else, wielding cool technologies like LiDAR and 3D scanning and stuff like that on mobile apps to really transform the way that these inspections are done. And so, let's say, for example, real estate agents get opened up in terms of who can do this inspection. There's 40,000 appraisers to fulfill the millions of transactions. There's 2 million real estate agents, right? So there's way more supply to be able to go and do that. And so I think that's going to be one of the big breakthroughs potentially in terms of really getting the appraisal down from 2 weeks to 2 days sort of thing. And so we're excited to see how that all plays out and try to lead all the efforts on whatever it turns into.
Wow, that's fascinating. So you're thinking that in the future it could be a scenario where a realtor brings in, like you said, some sort of device with a augmented reality or something like that to see what they're supposed to look for, and sort of give them the instructions without the years of training that would take like a normal appraiser.
Yeah, exactly. And I always use the metaphor of like a car versus a property, right? Like Kelley Blue Book has pretty much automated the valuation of a car because there's way more simplistic variables and measurements. And the tough part about valuing real estate is that there's so many variables, and it's highly subjective to some degree. And what technology and kind of data aggregation has allowed us to do, especially with the GSEs and like the millions of data points that they have, is bring this more standardized approach to it, where if you can generate all the X variables of the property, like the gross living area, the condition, photos, you can actually translate that into like a better version of an automated valuation model using that data, or at least sending that data to an appraiser, right, in some standardized way. So I think the GSEs are thinking about it in kind of a risk-based approach. Obviously, maybe you don't want to do that on like the mansion in Maine, right? But when you have 20 identical Texas ranches next to each other, something like that becomes a more viable option. So yeah, I think that some version of that is what the future holds.
Yeah, no, I think you're totally right. I think, yeah, whether it's an older home or a unique property, yeah, I mean, it's going to be tough to replace the human element there. But I think that your point on more of a cookie cutter property or something where it's multiple properties in the same neighborhood that are the same age, same condition roughly. I think that you've got a point there. So this fast forwarding a few years here, like 5 or 10 years, what from your perspective on the appraisal side, if you're kind of looking at the entire mortgage transaction, the entire borrower journey, what does the borrower's experience look like, and how is it going to be, radically different from today? 'Cause, I mean, I think that it's going to be radically different. I'm not exactly sure exactly what that'll look like, but I think that we're certainly not going to be looking like it does today.
Yeah, for sure. And in terms of do you mean specifically for the appraisal or just in general?
Yeah, well, let's start on the appraisal side and then see how that impacts the entire borrower journey.
Yeah, I think building off of the last answer, there are going to be some instances where even the borrower themselves are doing that inspection. And if it's a refinance and you just refinanced 12 months earlier and not much has changed, you're just kind of getting any of the changes in the property and that sort of stuff. So that and that actually happened with COVID. Virtual inspection tools where the borrowers themselves were doing some of the driving around some of that. So I imagine that may become a larger component. The other thing that I see happening is there's already, and this is partially what I'm talking about at your conference actually, is kind of that integrated experience across the spectrum of the process, where right now it's kind of disconnected, but with point of sales and loan origination systems and companies like ours building better APIs, you can bring a more integrated approach. So the borrowers going through a refinance might be able to schedule their inspection right from within that app and have an appraiser just show up at their door versus playing this clunky phone tag and all that sort of stuff, right? So I think from the borrower standpoint, that's gonna, a more involved version of the appraisal today with more transparency and all that sort of stuff is probably on the radar. And then in general, once again, I'm mostly an appraisal expert, but from the trends I see across is that a lot of the data that a borrower is bringing manually, whether it's credit, income, assets, all of that, it seems like that'll probably exist somewhere already, and that Zuckerberg is turning us into little data products, and people will walk in somewhere and their loan will be underwritten for them based off a lot of their information and whatnot. So I assume that's probably where we're going.
Well, that's a terrifying thought. I wonder who so is there a potential mortgage Zuckerberg out there right now running either a tech company or a lender that we should be either afraid of or excited to meet, kind of thing? I don't know.
Yeah, it'll be interesting.
Yeah, absolutely. So last question here. We're starting to run out of time here, but you guys, Reggora has been a good supporter of the California MBA for a few years now, and I'm just curious, from your perspective, why is it important for companies like you to support the advocacy work of groups like the California MBA, the MBA, and other industry groups?
Well, a couple of reasons. First of all, real estate, mortgage, it's all very local and community oriented, right? And so just building those connections with folks, super important. You want to be doing business with people, and obviously it's a little bit harder these days with everything virtual, but you want to be building, these are like crucial transactions in a consumer's life. You want to make sure you're doing it with partners who, you have connections with and you can trust and you've met before and all that sort of stuff. Obviously also, benefits in terms of just the actual work that people are doing in the community as well. And so I really just think that getting more involved, whether it's with, initiatives, community-oriented stuff, even education around, hey, what's working for you, what's working for us, this is what's happening, just kind of rising tides, raising all ships sort of thing is what groups like yours deliver. So super excited to be a part of it. And yeah, always excited to go to your events.
All right. Well, and hopefully this will be the last virtual event for quite some time. Hopefully we'll be back in person, be able to have some of this collaborative efforts in person, be able to look each other in the eye and shake hands and all that. Hopefully that's coming soon. Brian, thanks again for joining us today on Connect, and best of luck to you guys at Reggora. And I look forward to seeing you again here coming up on May 4th and 5th at the Mortgage Innovators Conference.
Yeah, sounds good. Really appreciate it. Thanks for having me.
All right. And if you enjoyed the conversation here, make sure and subscribe to us on our YouTube channel. You can also catch the podcast on SoundCloud, Spotify, and Apple Podcasts. And remember, if you haven't yet registered for the Mortgage Innovators Conference, go there right now, mortgageinnovators.com, and use promo code Brian to get 50% off. And we'll see you next week on another episode of Connect. We'll see you then. Here we go.